Now, just recently, the Retirement Benefits Authority, RBA, licensed Kenya's first Sharia-compliant pension product, offering Muslims an opportunity to save towards their retirement. Now, the regulator has allowed T.I.A Insurance of Africa to introduce the pension product targeted at both individual and company-sponsored schemes to help the more than 2 million working-age Muslims save for their old age. That forms the basis of our discussion on the Inside Business interview. And now, joining me in studio is Hassan Bashir, the Chief Executive Officer of T.I.A Africa. Thank you so much, Hassan, for your time.
Thank you,
We appreciate you for joining us on Inside Business.
Thank you.
Where we want to understand the issue about the pension services offered. Now, tell us about the product and what really informed its creation.
Thank you, Zawadi. The product is a pension scheme similar to the other pension schemes we have in the country, both occupational as well as individual. And as you are aware, generally Muslims in our country are on the outside, on the periphery of the pension schemes.
Right.
And the pension sector is a very important sector in our economy. At the moment, perhaps over 520 billion shillings in size. And a significant chunk of our community here in Kenya may not partake in that. And that's a loss to the country. So there is significant gap that exists both for the old age need of the community as well as in terms of savings and in terms of economic development. So this product intends to fill that gap. So we have been licensed, as you said earlier, for both corporate pension schemes as well as individual. And we are currently piloting the corporate, and we will be doing a main launch in June this year. Yeah.
Basically, how is it different from the conventional pension schemes we have that have been in the market, which have no Sharia-compliant attachments?
The key difference, Zawadi, is in the way that money is invested. You know that particular problem that Muslims have with interest and interest-based instruments. So the key thing, this is a pension scheme like any other. The key difference is how the money, the savings are managed and where they're invested and what kind of income it draws and how that income really.
Just looking at the fact that we do not allow, or maybe the Sharia laws do not allow funds to invest in interest products like you mentioned earlier. Really, how then does your business keep afloat? Because you need to make money to stay in business.
Very true. Significant amount of the current pension savings that exist in our country are in secure instruments, government instruments, treasury bills and bonds, and those are of course interest earning instruments. However, that is only part of the investment income. The focus of a Sharia compliant pension will be non-interest based, not government instruments. Of course, quite a lot of the current pensions also invest in other areas such as stocks and Nairobi Stock Exchange, and in businesses, in real estate, in other areas, in oil and so on. So basically, T.I.A pension scheme will avoid the instruments, whether it is bank given or whether it is government instruments that bear interest. Now,
are they only limited, the pension product, is it only limited to Muslims, or can non-Muslims also partake of it?
No, non-Muslims can partake of it. Of course, within certain guidelines, those rules, of course, we will invest in businesses that are seen to add value to society. We will not invest in businesses that, for example, deal with alcohol and other, tobacco and mirror and things like that. In addition to that, we'll invest in areas that are defined and approved by a Sharia scholarly group. But all Kenyans, non-Kenyans who are interested can invest in them. So there's no limitation to who, as long as you agree to be bound by those particular investment rules, moral and ethical rules. Yes.
You could maybe take us through the process of joining the pension fund, for example. What do you need as an individual or as a corporate, and how do you go about the whole process?
We're just beginning our piloting process. We'll be starting with the first 2 or 3 companies. We're starting the corporate pension scheme initially. So the requirement is basic, similar to what is required when you're joining another pension. You fill the forms that are require you to provide individual or group information. If it is a company, of course, it will be done through salary deductions. Generally, you can go, let's say, deduct 5% of your salary, and your employer can add 5 or 6 or 7, depending on the company. We are proposing, for example, now in our piloting, a system that deducts 6% from the individual salary and 6% from the company. The company, of course, can go beyond that and help the employee save more. In terms of what information is required, the basic biodata is required. Your name, your ID, your data like that, and the dependents, the people who, in the event of death, the people who will benefit from your savings also will be listed in that file. So that basic information, which basically is not really much different from what normal pension schemes pick. Yes. Now,
being this all Sharia-compliant underwriter in Kenya, what contribution do you think you've made to the financial services sector since 2010?
We have, and I think if you remember, we were licensed in 2011. So we are now 2 years old. Our first year of operation generated 180 million Kenya shillings. Our second year generated 430 million. So we have grown at 142%. That is significant. 90% of that business is from the Muslim community, and significant amount of that business is from people or businesses that were not being insured before. Our target this year is 900 million, and we think that we are bringing into the fold, in the insurance fold, businesses, individuals, assets that were not being insured before. For example, many Muslims who own real estate, commercial, residential, and so on, were not insuring the fire policy, the domestic policy, and policies like that, or were not insuring employees for certain policies. These are now coming on board. If you realized or you are aware of the declaration we made about 2 weeks ago on 6th of this month, we declared surplus for the year 2011, and on the operation of 178 million in 2011, we declared about on the risk fund account, on the business account, we declared 26 million profit. That is largely belongs to the customers. And this week and next week we'll be distributing about 15.6 million shillings as profit return to the people who insured with us in 2011. And so this is a new addition to the industry, something that is first again. In the conventional model is a model that provides risk management and then gives the profit to the shareholders at the end of the year. A takaful model is a model that manages risk, insures the people, and shares the profit between the shareholders and the the people who give us the businesses. Yes.
Now I want you to, I know you mentioned this at the beginning,
yes,
but just give us a clear understanding. If I partake of the pension service
yes,
offered by Takaful of Africa,
yes,
how does Takaful of Africa pension department invest those funds? Because I know if you look at the conventional means like NSSF, they'll go to the securities market or maybe treasury bonds and invest there, so that by the time I retire, my money has accumulated something on top, some interest on
yes,
top. So for you, how do you do this?
Zawadi, perhaps I shall put you in context. Generally, the financial sector regulators, the 5 financial sector regulators, the Central Bank of Kenya, the Capital Markets Authority, Insurance Regulatory Authority, the Retirement Benefits Authority, and SASRA, which regulates the cooperatives,
Right,
have been working over the last 5 years or 6 years or 7 years on a key strategy which is called financial inclusion. Basically bring everyone, every Kenyan into the financial fold. What we are doing, both in the takaful model as well as the Sharia compliant pension, is basically satisfying or meeting that strategy. What that really means is that the Capital Markets Authority is running at breakneck speed to create a Islamic capital markets in Kenya, which market is also going to serve the East African region. The rest of Eastern and Central Africa is now considering licensing the first Islamic banks. Kenya is already talking about developing the Islamic capital markets. The money markets is already developed. There are at least 2 fully fledged banks and about 10 Sharia compliant windows. The insurance scheme was there for 2 years. The pension has come on board. Sasra must be working on something with respect to that line of business. You'll hear about that soon. And what that really means is all these activities, including the money, the savings within the money market, the banks, is looking for a way to find investment instruments. And CMA has been working on this for a while, and we are expecting to have a basket of stocks very soon, a basket of bonds and commercial papers that are, or infrastructure bonds that are Sharia compliant. And this is providing the fodder for that.
Wow, thank you so much. We appreciate you for the insights you've granted us.
Thanks.
And we hope to invite you again to talk to us in greater detail. Now, I've been talking to Hassan Bashir, the Chief Executive Officer of Takaful Insurance of Africa, talking to us about the Islamic pension scheme that is recently established or licensed by the Retirement Benefits Authority, the first of its kind in this market. And we believe you're now informed. Thank you so much for finding time to join us on Inside Business. My name is Zawadi Mdibo. Until tomorrow, same time, same station, stay tuned. Good afternoon.